We're going to analyze Amazon as an investment, and we're going to do it all in 90 seconds. You want to keep up with stocks, but you don't have time to read a lengthy report on every company that interests you. You're busy. I get it. I respect that. So I took the most important considerations from my research and packed it into 90 seconds. Use this to decide if it's worth your time to research further, to keep up with stocks you already own, or to just check in on some of the largest companies in the world. Fair warning, I'm obviously going to go fast. Let's pull up a clock and let's do this. Amazon is the largest online retailer in the world. It also currently has the market share in global cloud infrastructure. As of this taping, its market capitalization is almost $780 billion with a price per share trading over $1,600. To own or not to own? That is the question. Here are a few reasons you might want to consider owning Amazon. It's growing like crazy. Its 5-year average earnings growth is almost 40% per year. Last year its growth was over 50%, and you can compare that to the online retail industry average of less than 30%. It's expected to grow by another 40% this year. It seems like there is nothing Bezos can't do. From selling books online in the 90s all the way to launching rockets today, he clearly has a way of making his visions into reality, which makes it exciting to see how far that can take Amazon. But there are also a lot of analytical reasons to not own Amazon. They don't pay a dividend. Amazon's ROA and ROE are lower than the industry average. And when you look at valuation metrics, Amazon looks terrible. PE of 196 versus the industry's 40 and the market's 18. It has a PB of 25 versus the industry's 4 and the market's 2. In fact, a discounted cash flow model based on their projected future earnings would suggest the stock is more than 100% overvalued. But that's the thing about Amazon. Bezos don't care. The focus has always been more on future growth than making shareholders happy today. It's only relatively recently that they began posting consistently positive earnings. For the longest time, they were negative and all over the place. Even if you're confident that Amazon's future growth justifies its current multiples, investors should not be surprised by a dramatic decline in share value, way more than the industry should we enter a bear market. So what do you say? Buy or no? Do you think Amazon deserves a valuation 5 times larger than its industry? Can it keep up this crazy growth? I look forward to continuing this discussion in the comments. And if you found this video helpful and would like to see more, don't forget to let me know by hitting that like button. Definitely subscribe and click the bell so that you can keep up with all the companies we cover as we continue to help you build your rapidly growing, highly diversified net worth. I'll see you in the next one. Take care.